Take it or leave.
Hello. Welcome everybody. Hello. Happy Wednesday, like always. First week back from spring break. Hope everybody had a good time. I know I took advantage of it. I really got some rest. And let's get started with our general meeting for today. This is our agenda. We're going to start off with the outperforming moments. You're going to sign in and we'll have all our presentations. Hopefully there's going to be some good ones here, special since we're going to be covering 2 weeks worth of, news and reports. So let's start. Outperforming moments. Any special ones? Even though the week is new.
Got an exam today. That was worth 30% of my grade.
Another.
Got 100 on my banking exam.
Good job. Congrats. And one more. Sweet biking. I strive to bike that much. I'll give a small outperforming, well, it's not an outperforming moment. It's kind of like a news. I'm going to my first hackathon this Saturday to Sunday here at UTSA. If y'all want more info on that, y'all are free to join. It's open to anybody really. So, thank you. The quote for today, a little inspiration here. If there's no struggle, there is no progress. I know spring break just passed and it's hard to get back on the ball. I know I experienced that myself, but we have to push through the struggle and just keep going at it because we're better today than we were yesterday. And now for the sign-in, should be open. That's what I was doing. So scan the QR code and you'll be entered to the $25 gift raffle. 2 winners. Give me a thumbs up when everybody's got that down. I still see a few people. Okay, we got it. Now for the market outlook with Anthony.
Good evening, everyone. So nice coming to these meetings when it's still sun outside. So here's our breakdown for today. We got our markets, we got our selected earnings, a little bit of the news, a random walk, and the market watch competition. Here's our price change since the last meeting. We see all indexes are up, especially the NASDAQ and emerging markets. Here's our price change year to date. All markets are down, with growth stocks being the most, and the NASDAQ with a negative 9.8. Here's our price change for the last 12 months. I really like how clean these graphs are, and this one tells a story on Ethereum. I believe they finally just broke 3K again, and Bitcoin finally came back up to either 44 or 45. Here's our sectors. All the sectors are up from last meeting, or should we say since last Wednesday, with consumer discretionary, with a 9.4%, followed by communication services with a 6.8%. Here's our price change year to date. You see all sectors are down, with communication services with a negative 12%, followed by tech and real estate with a negative 9.8. As we can see there, energy is the big story with a positive 36.5%. Here's our price change the last 12 months. All sectors are up except for communication services, which is down a negative 2.9%. Again, you can see some of the story with the energy and real estate. Here's our sector heat map. Some things have recovered a little bit with some of the past news going on that just keeps disseminating almost seems like every hour. Not seeing any company that sticks out to me. Navita's down a little. Here's our crypto list. Obviously, we excluded the top two. Tether, all of the crypto are back up. In the past week, in their 7-day, as well as you can see the tiny graphs on the end. And these are actually most of the coins that actually have some utility. All right, here's our most anticipated earnings this week. As we see, Monday after close, you got Nike, you got Carnival Cruises, a lot of, should I say, with the oil, it's been dragging down some airline and cruise stocks. You see on Wednesday, we have KB Homes, Love General Mills, Tencent. And you know, before I move on, I got to get somebody. What's one good company?
Honest.
Honest. Can you tell me a little about them?
So like baby care stuff, so baby wipes, mostly like cleaning supplies for children care.
Nice. You know what? I actually think I have seen them in the little baby aisle. Thank you for that. They look like they're some type of organic. And so here's our anticipated earnings this week. I like Adobe a lot. We got Worthington Industries, Health Equity Inc., AAR Corp, and Poshmark. Seems all of them have a positive expected growth revenue from the analyst.
Time out. Did they have 70% growth estimated?
It's funny how I believe this is from Earnings Whispers, how they rate that. It's they're like, you know, in the group of them, they're all saying like, we're all gonna, this is all positive. It's not, or it's, I guess it's their sentiment, I should say. Here's our earnings reported for this week. Cytera Technologies, they beat on EPS, missed on rev. You got Chicago Atlantic Real Estate. They beat on EPS, missed on rev. You got Star Equity Holdings. They beat on both. BuzzFeed Inc. beat on both. And then you got Avenger. And they missed on EPS. 100%. This is the earnings coming next week on Monday. You got XP Inc., Science Applications, Jefferies Financials Group. I want to see what they're doing. Itirum Therapeutics, and Beyond Technology. And so I've done a little digging, and I find it interesting to see what's going on with Russia right now. As you can see, they're set for their stock market to partially reopen tomorrow. And Russia has locked it down where foreign investors are blocked from selling local shares or from trying to pull out of their markets in a quick fashion. Short selling's banned. There's also talks about they may possibly split it up after this. And so I looked back when Russia invaded Crimea and the MOEX fell 18% during that time frame, and then of course rebounded 12% by the end of the year. And so back onto that, I was looking up when all the Russian coupon payments are due. And so a lot of people have been watching these as there is some complications depending on the contract, whether it can be paid in USD or rubles. And so it seems they tend to make it complicated for them to pay their debt. And so they have the means, but they just may not have the actual ability, or excuse me, they have the willingness to do it. They don't have the ability. And so if you remember back with the Bolivarian Republic of Venezuela, when they had their coup or their issues with their government, there was a Supreme Court ruling that private creditors can go after offshore assets, and which they did. And so this is possibly what could happen if Russia default. I believe they had a $2 billion coupon payment due today, and they also have a 30-day extension period. And so I've been reading my book, putting miles on my shoes. And in this chapter, they continued to cover the housing bubble. and what they call ninja loans or no doc loans. Basically, they're giving loans to people without the 2 years work history and credit. And so then they touch on more speculative bubbles or just situations. And one is the crypto phenomenon and BTC and how it isn't truly it truly can't be a form of money. One, two, it does meet the first medium of exchange, and in some ways it may be better than cash, but it fails the last two, right? It's got daily volatility. It's truly not, also most of it is owned by several big whales, so they can definitely change the price within a short amount of time. As well, we need some more people to join the Market Watch competition. Here's the link. Please join right now. Let me see if I can throw it in the chat. It's okay. I'll post it on the Discord and the Telegram later. Hopefully, we can get a lot more people going. So you see, you got some big prizes here. You know, you need some summer money. And here's our password. It's an Invest 2020. Excuse me, 2022. And it's going to be completed by April 20th. And so is Andrew Hernandez here? Oh, look at him. And so I looked at some of his stuff. Man, he's got some stocks. Yeah, he's got waste management. He's got trying to think a couple others, but he's doing great. And so hopefully some more of y'all can join, please. Every Thursday, 4 p.m., I'll be in the FSC, learning some cool stuff. Thank you.
Great job, Anthony. So today I'm going to go over the recent Fed rate increase at their March 15th and 16th meeting. Next, I'm going to be looking into Robinhood and some specifics on how they make money and some of the stuff going on with that company. I'm sure everyone's got a familiar background with Robinhood. And lastly, I'm going to recommend a documentary. So the Fed rate increase, it raised its rates a 1/4 percentage point, and this is the first time it raised rates since 2018. You can see a chart on the right of all the target rates going back to 2000. So the officials have planned 6 more increases by the end of the year. That's what they're expecting to see. And to meet projections, experts are saying that they'll need to raise rates by 1/2 percentage point to increase the rates above 2%. That's interesting because there was an 8-to-1 vote, and the one vote that was opposed to raising rates was in favor of raising them 1/2 percentage point as compared to 1/4. That was done by the Federal Open Market Committee, and that was done at the meeting. And Jerome Powell said at the next meeting, which is on May 3rd and 4th, the Fed plans to finalize a plan to shrink its $9 trillion asset portfolio and implement it shortly after. So some of the results of this increase, the average 30-year fixed rate home loan rose above 4.25%, which is a full percentage point higher than it was 1 year ago. What we're seeing is a lot of central banks, I know Europe has for sure, they're all increasing rates on the favor of inflation rather than worries of overseas conflict in Ukraine. So a lot of rates are starting to tighten their monetary policy. So crypto, they actually discussed crypto at the March meeting. The exact quote is, "It's highly likely that digital financial activities that are currently outside the regulatory perimeter will be brought within it, which is necessary to level the playing field, keep trust of users, protect consumers, and all of that." So maybe we can finally see a regulation of crypto. I know it goes against what a lot of crypto stands for, but it could be something that we're seeing pretty soon. So Robinhood, has anyone here heard of Robinhood or maybe even traded on it? Pretty much everybody. So it's an online brokerage that offers commission-free trades on stocks, ETFs, and cryptocurrencies. It's most known for going public. I believe it was about a year, maybe a year and a half ago. And they really gained their reputation, so to say, regarding GameStop and AMC. So the Robinhood business model appeals to new traders who mostly don't plan to buy or hold any assets long-term. Most of these people are day trading or swing trading their either cryptocurrencies or stocks. So here's a chart that I found really interesting. This was a study done by Motley Fool on young people, what online brokerages they're going to. And you can see 37% of investors aged 18 to 40 in this survey chose Robinhood. It's not surprising, this large number, because they do advertise at first glance to have pretty much no fees. Seems very simple to make money on there. I actually set up an account during the whole GameStop thing, before they shut it down. And it's very easy to create an account and trade cryptocurrencies on there. So that's probably why they're appealing to Gen Z and millennials. But by a far amount, they're beating any of the other ones. Fidelity, Acorn, Stash. Don't even see E-Trade on here. Oh yeah. There's a long list, but most of these are, I think the rest of them are all like less than 5%. So how does Robinhood make money? PFOF, which is payments for order flow, accounted for nearly 75% of their revenue last year. And they saw success in early stages of the pandemic when the market acquired new and younger retail investors. As you can see right here, the average revenue per user was $65.70 in 2019, $108.90 in 2020, and $139 in 2021. So the company really picked up during the pandemic. And as you can see, 40% of users traded options during the pandemic. So again, what they do is they sell these order flows, giving bankers the first look at large order volumes before the trade is executed on the user end. And it makes it very difficult for users or retail traders to buy positions at a desirable price before these large hedge funds get the information first. They've actually been tried for violating what's known as best execution, which gives Robinhood, it allows them to sell their order flows, given that the user trades go through with reasonable diligence. They were actually tried about, I think it was between 1 and 3 months before the AMC and GameStop for doing something very similar. But what they do is, so for example, when people were trading GameStop during that situation, they decided to completely freeze assets because they were losing money on it. A lot of people were buying these GameStop positions and they were selling the positions before they could actually go through, allowing bigger hedge funds to get the competitive advantage. So the risks of Robinhood. They have a gamified platform. It's very similar to social media with their app interface. It's not something that's very common among many online brokerages and other apps. They kind of design their platform. They actually have a team designated to designing their platform to keep you on it. So they want you to buy positions short-term. They don't want you to hold any assets long-term. And another risk is on January 28, 2021, they froze the trading on AMC and GameStop, really resulting in a lot of retail traders losing a bunch of money. What sums it up the best is this quote right here. If you're not paying for the product, you are the product. Ultimately, they're waiving off all of these fees and they're selling your information for them to make a profit. Their profit on that was actually 75% of their revenue. So it's very clear that they're on the side of the hedge funds rather than your side. Lastly, my documentary recommendation. This was a 50-minute documentary that covered global supply chain issues and how they'll be impacted long-term. It's a Wall Street Journal documentary. It's available on the Wall Street Journal. I don't think you need a membership for it. In fact, I'm pretty sure. And to access it, you can just Google supply chain documentary, Wall Street Journal, and it should pop up. I watched it over spring break. It was very informative. A lot of the issues that we saw through the pandemic, they brought on many experts, some saying that it won't be an issue long-term, and some people saying that supply chain issues will go, it'll be changed forever. So it's a very informative documentary. If you're interested, I'd recommend everyone to watch it. Thank you. And this is my LinkedIn if you'd like to connect and scan the QR code. And if you have any questions regarding sources or anything else, feel free to email me or I'll be around after the meeting.
Hello, everybody. Today we're going to talk about Sprint and Frontier. They made a merger early February for 6.6 billion. Okay, first history for both firms and for both airlines. Frontier was founded in 1950. And it was a merger of 3 different airlines: Arizona, Challenger Airlines, Monarch Airlines, and they formed Frontier. In 1986, they went bankrupt and ceased operations. In 1993, Continental Airlines reduced its flights from Denver and to Denver, which marked like an opening for somebody. And this somebody was 2 Frontier pilots and the ex-CEO, MC Hank Lund. And he partnered with Condor Airlines in order to provide the planes. And that's how Frontier restarted in 1994. Now Spirit Airlines, founded in 1983 in Macomb County, Michigan, initially called Charter One Airlines. And you can see the airplane back in, I'm not sure what year that was. And they started also by providing to tourist sections, regions such as Las Vegas, Atlantic City, and the Bahamas. Now more background. Frontier is currently headquartered in Denver, Colorado, and it has over 100 destinations and 31 international destinations. This is one of their planes in Denver. Spirit is headquartered in Miramar, Florida. Destinations include the US, the Caribbean, and Latin America. And these are their offices in Florida. Now, does anyone want to guess if they made money during 2021?
No,
No?
no, not at all.
Perfect. In 2021, the revenue was 609 million and their net income negative 53 million. And for Spirit, the same story. Revenue 3.2 billion and they lost 472 million. Now, this is a graph that shows the biggest airlines by passengers in 2020. And as we can see by the graph, Spirit is number 6, is 6th in the US, and Frontier is 11th. American Airlines is the first one by a huge margin. And obviously their merger makes sense because they want to take competition from the other airlines and also get more market share, because that's one of the ways you start making more money in the airline industry. Now, notable mergers in the airlines industry. The reason there's a lot of mergers, like I mentioned, in the airline industry. One of the ways of making more money quicker is to expand and to have a bigger market share in certain routes. You just don't like buy a plane and start from a route. You have to have also market share in that route. So this is a big way of, like I said, growing. And these are some of the biggest mergers. In 2008, Delta Airlines acquired Northwest Airlines for 2.8 billion. In 2010, Southwest Airlines acquired AirTran for 3.4 billion. 2010, United Airlines and Continental Airlines merged for 8.5 billion. 2013, American Airlines and US Airways merged for 11 billion. And in 2016, Alaska Airlines acquired Virgin Airlines for 2.6 billion. Now, the airline industry is also famous for its low net margins. And as I'm going to use United Airlines as an example because Frontier and Spirit have lower revenues. So I thought it would be better to use United Airlines. And I'm also going to use the years 2018 and 2019 because the 2020 and 2021 are affected by the pandemic. So the numbers are not as accurate as I want to represent them. So in 2018, revenue was 41 billion and net income 2 billion with net profit margin of 5%. And in 2019, revenue 43 billion, net income 3 billion with net profit margin of 6.9%. And Google, obviously a tech company, net profit margin of 22%, and then in 2021, 30%. Now, these were their margins in 2020 for those that are interested. Okay, revenue 15 billion and net income, they lost 7 billion in 2020 with net profit margin of negative 45%. Now, there's also an interesting thing about the net margin is that unlike many other sectors, the airline sector, if there's a bad weather, the flight gets canceled. If there's a pandemic, the flights get canceled. If there's Ebola, flights get canceled. If there's war, flights get canceled. So their margins are really, really low. And also if like the pilot gets sick and the substitute pilot gets sick, there's more things that may affect the revenues of the airline companies. That's why the margins are lower. Okay, some facts about the case between Spirit and Frontier. Firstly, both airlines are considered ultra low-cost carriers. A low-cost airline can have amenities such as TV, food, Wi-Fi, and video entertainment. Ultra low-cost airlines do not provide those amenities, but ticket prices are lower. I thought it was a funny cartoon. Ultra low-cost carriers. They probably paid $10. I mean, that's not good, right? But they probably would have paid nothing. Okay, like I mentioned, together they would become the fifth largest U.S. airline based on passengers. Frontier, okay, and also in this merger, one company is not buying outright the other one. Frontier is just they're going to merge operations, and Frontier is going to control 51.5% of both entities, meaning they're going to be the ones that make most of the decisions, if not all. And Spirit shareholders will receive $25.83 per share, a premium of 18%. Now, why did they merge? Costs, like I mentioned, costs are a big thing in the airline industry. COVID-19 has added cost to a cost-sensitive business. Additionally, a combination of rises in wages, fuel prices, and airport charges have affected airlines' bottom line. Spirit's wage expense as a percent of revenue rose 10 points in 2021 versus 2019. Again, 2019 was a year. So 2021, a year where they lost money, increasing expenses is really bad for them. The same for Frontier, high fees on certain airports caused Frontier to exit Los Angeles, San Jose, Washington, Dulles, and Newark. Why did they merge? The merger is expected to save the new company $500 million a year in operating expenses and create over $1 billion in savings for customers and expand to more than 145 destinations. And now this is Frontier CEO Barry Biffle. In a competitive industry like ours, the lowest costs always win. These low costs will in turn enable us to keep our fares low for customers. Now this is Ted Christie, CEO of Spirit. The transaction is centered around creating an aggressive low-fare competitor that will better serve guests, expand career opportunities for our team members, and create value for our shareholders. We believe we are a perfect fit with Frontier. Our business shares similar values, including our long-standing commitment to affordable travel. Now, this is the last thing. The official CEO, new headquarters in New Mexico, decided mid-2022 when the deal officially closes. So they haven't decided if it's going to be called Spring or Frontier, or they're going to go with a new name, which probably won't happen because all the marketing already has in their names.
I didn't even think of that.
Okay, merger is worth 6.6 billion. Okay, now a year ago, the actual Spirit was worth more than now, but this is the interesting thing here. Before the announcement, Spirit was worth $21.73. After the announcement, it grew 17% to $25.46. Now on Frontier's chart, a year ago it was worth $18.85 a share. Today it's worth $11.16 after the war and everything. But they only increased 3.47% after the announcement was made. That's it. Feel free to ask any questions. Any questions regarding Spirit and Frontier?
Why do you think that one had a larger percentage bump than the other did after they announced?
It's more because Frontier is paying also for the shares of Spirit. They're getting since they're going to be the controller. They're paying for shares from Spirit. Like I mentioned, they're paying $25 a share to any Spirit shareholders. So that's what made the Spirit share price increase 18%. Perfect. If you want to connect on LinkedIn, there's my LinkedIn. And now at the sweet spot, Mr. Sweet.
How y'all doing? We got our CFA team here. Give them a hand. They got their trophy. Pretty exciting. All right. So I always like the question, and if a stock falls a lot, the question of, is this a buying opportunity? What do we call that? Buy the dip. What if the dip's 30%? Is it still buy the dip or is it buy the crash? So, yeah, let's take, we got a little time here, so let's figure out what you think here.
There's no such thing as a falling knife, not even Cisco.
All right, well, here's the first one. Facebook, you know, we keep seeing, Anthony keeps saying communication services is having this bad year, but it's almost entirely Facebook, because I think Google's actually doing okay relatively. But Facebook fell a bunch. If you look at the valuation, Facebook, their PE got down below 14. They're back up a little bit because they've come back quite a bit. 15 seems like a pretty low PE ratio for a Facebook. On a price to book, they look pretty cheap. They still look expensive on a EV to revenue, but relative to their history, they look pretty cheap right now. The issue they're having here is slower growth, a dip in daily users. So this is a firm that has been growing pretty fast. Now, I forget how many, what is it, like 3 billion users? You know, it's hard to grow fast when you have half the world. You know, you can't have 12 billion users if there's 7 billion people. So there is a limit to how much you can move here. But we're talking about just growth in users. It's also advertising. I actually like Facebook just for the videos. I watch their videos. I've stopped posting on Facebook for the most part, but I do still use their service. And their videos, their advertisements are not as irritating to me as YouTube's are. YouTube's, you know, I'll put music on and I'll go do something, and as soon as I walk downstairs, a 10-minute advertisement comes on. So at least Facebook doesn't do that. But I mean, they gotta somehow monetize this. And as you know, as we said earlier, as Jake mentioned, if we are the product, and that's what they're selling. So how much more can they squeeze out of this? What I don't know what a metaverse is. Anybody know what a metaverse is? I don't know if they're a deal. Am I going to be doing metaverse, or am I too old?
You're gonna be right.
You can. It's super cool. It's essentially just like VR. So like, have you ever seen like an Oculus?
Metaverse.
Oh, while I'm on my bike, I would do that. Okay.
Yeah, like you.
All right. I'm probably. I'm getting a sense you're saying I'm too old. So my thought on Facebook, because I have been interested in Facebook, is this is a firm with a lot of cash, a lot of really good assets, a lot of smart people. Could they be the next Microsoft and turn this around? I'm not saying it's likely, but I'm saying it's certainly possible. So I do think there's a tremendous amount of upside because they do have some things they could do. Will it work or not? I don't know, but that one interests me. This one is Peloton. I've never owned a Peloton. I do the real life stuff. They just went crazy with COVID, so much that people were waiting, 6 months, 7 months to get a bike. And then they did some really bizarre things where they cut the price of their bike. I don't quite understand. They had this tremendous surge in demand, so they cut their prices. Does that make sense?
Yeah, that's not
But, they're trying to get down to the next level, to the cheap people like me. So they've gotten all the expensive people that are going to spend $200 on a bike. So now they're getting to the cheap people. It's an incredible business model. It's one of these, you ongoing service fees. Very, very profitable. Makes a lot of sense, the profitability of it. It's the growth that's the issue, right? That's what people are really worried about here. Peloton slashed its full year sales forecast. It's got $1 billion sitting in inventory. So some issues there. What I don't see here is, like I see with Facebook, a potential tremendous upside. Because now they're going to cheaper people. The cheaper people, because they don't have as much invested, they're much more likely to cancel their subscription than the wealthier people. So I don't know if it's as good of a business model trying to get to the cheapskates like me, because we're kind of picky. So that one doesn't quite interest me so much. Also, they're not all that cheap. They're still relatively expensive relative to their industry. So the next one, PayPal. I hate PayPal. Our charity has spent, I think, $7,000 on PayPal fees. It's just ridiculous how much they take from us. I wish I could find other ways for fee. I've already told people we work with in Costa Rica, if you have someone who wants to send us $5,000, would you please have them mail a check? Because I don't want to have to send $100 to PayPal. So I think it's ridiculous how much they charge. Their stock has fallen quite dramatically, but there's still a 33 PE stock. This is not a cheap stock. I'm hoping they're put out of business, quite frankly. Someone much better comes along. I love Zelle. I use Zelle all the time. Our charities bank now accepts Zelle, so I do more Zelle now. I allow people to do Zelle. Yeah, I hate PayPal. I just think it's grossly overpriced, but PayPal, they're doing great because of COVID. Again, you know, some of these companies you're noticing they sold off because the market essentially kind of I don't know, extrapolated COVID into the future, as if, you know, Zoom and these firms were suddenly, you know, COVID was like the new normal, and they just can't sustain that kind of thing. And PayPal is one of those firms. PayPal was an investor favorite. The migration to online shopping and all that helped them. Investor sentiment started to sour after coronavirus lockdowns eased and in-store sales recovered. So I don't know if I can think of an upside for PayPal. I can think of some disasters for PayPal. New technology, new ways of doing things. I don't know if Bitcoin will take them out. It sounds like probably not, but Moderna interests me. I love, you know, there's people I know would really hate me for saying this, but I really love mRNA. I think it's an incredible new science. I think it's incredible what it could do, and it's still a lot out there. What do you say about the valuation on this stock? This is a 6 PE company. Does that sound expensive to you? 6 PE company. Why is Moderna trading so cheap? Pretty interesting to me. Very interesting firm, very well managed. That one anyone make a strong bear case for Moderna?
Does it have to do with the rapid change of the variants and how the vaccine is just not being as effective?
That's what the articles are saying, but that assumes mRNA COVID's the last thing it's ever going to address, and there's so much more that it could address. I like the idea of mRNA. We're developing vaccines like in a week. I mean, that's pretty amazing.
Is it FDA approved? I don't know if Pfizer has, like, it's safe for children, so I think Moderna is just kind of like behind, but they keep it cheaper so that way it's still a stock that, it's still going.
Oh, so my hearing's not good. I don't know the science behind it. I've listened to a few podcasts.
So I think one's like FDA approved. So Pfizer's FDA approved. I don't think Moderna's FDA approved.
Well, I don't know. It seems pretty safe. I don't. I know with Walgreens, I went to Walgreens to get my booster, and I had Johnson & Johnson. So I go there and they say, we don't have Johnson & Johnson. So they say you have to go to our other store. So I drive all the way to the other store. I get there and they say, you're better off getting Moderna instead of Johnson & Johnson. It's like, oh, okay, that's the other store just sent me away. So, so I don't know. They were pushing Moderna in the Walgreens in one of them, not in the other one. I don't know. What's a strong bear case for Moderna?
Is FDA approved?
Yeah, I would think at least it's safe, but I don't know. I'm pretty excited on the healthcare side. You know, I was listening to a podcast on microbes, and that really gets me excited because they're curing diseases that we didn't cure in the past. So there's a lot of stuff going on here. I listened to a podcast on Moderna. I mean, there's so much more there just other than just COVID, but we'll see. Do you think we'll ever have another pandemic in the next 50 years?
Oh, yeah.
Or is this the last one?
No. We're getting like this.
And is it nice having a vaccine happen that quickly? You know, it seems pretty good. Here's one. I don't use this firm. Do y'all use this firm, UTSA?
Yeah.
What's different about them that we use them instead of whatever Amazon or whatever else?
It's a little bit more like client oriented. You build a stronger relationship with the person who's actually selling you, and they're a little bit more unique rather than bulk. So like if you have a desire for like something that's very unique or like focused, more than likely it's on Etsy.
All right, so it's a little less kind of industrial than Amazon. It's more,
Your aunt who
More
crochets.
creative.
okay.
Platform you can create with.
All right. Well, that would never go on that site then. So its stock dropped really, really dramatically, but it's a 42 PE stock. So this is not a cheap stock. This is another stock that really benefited from COVID. And then the market said, you know what? Now they're still growing really fast. So they're still growing fast. They're just not growing as fast as people thought. That one I would probably avoid because I don't really understand it. I do, you know, Peter Lynch, he talks about buy what you know. So I do think a lot of these, if I can go out and try a product, I definitely will do that before I will buy the stock. I do like to at least have the experience. And that's what the podcast I was listening to on Peloton. I don't know how much Peloton was paying these guys, but they didn't like the stock, but boy, they were pushing the buy because it's wonderful experience and all this kind of stuff. So it was interesting. So before I would buy a Peloton, I would actually go, you know, one of the local places and at least try it and see what the experience is. Should I try Etsy and just see?
Yeah, I mean,
Is it like Etsy.com and it's obvious
It's
what
like
to
an
do when I
app.
get there?
yeah.
Am I a buyer or a seller?
You do whatever you want, sir.
I'll go start selling my crafts and we'll see what we get.
I'll buy.
But lackluster forecast suggesting growth hard to sustain. The online marketplace projected revenue that fell short of analyst expectation. Revenue didn't fall, it just didn't hit these really lofty expectations. And again, pandemic fueled growth. Sales would be 660 to 690. The market was expecting 692. Their sales more than doubled in 2020. That sounds pretty good. Seeking to keep and expand their customer base, the company made a pair of acquisitions. Etsy said at the time of the deal that these companies will run independent brands along with Reverb. So they're doing some acquisitions. So my question on a firm like this is priced so expensively, they're growing fast, is what are they doing that a competitor can't just copy and do the same thing? Do they have some huge advantage? You know, it's kind of the, you know, eBay used to be like that, right? You need to sell something, you go to eBay. So they were the platform. Do they have something that gives them some uniqueness? So that one podcast I was listening to, I thought was really interesting. They said it's all software. The companies that are going to succeed are the companies with the best software. The best airline in the world is going to have the best software. The best insurance company is going to have the best software, right? Fun. So whoever has the best software is going to be the best company. And so that may be the case here. Whoever has the best software, they understand their customers, they give their customers good service. So maybe that's what they have. I don't know. I'll have to go experience and see. Netflix. Woo. Netflix is a company that, you know, I'll every 3 years sign up for 1 month. See if there's something good to watch and get off. So I haven't been back on Netflix in quite some time. Not a cheap stock. They're still 33 PE, but their stock did drop quite a bit, pretty dramatically. It's the same thing where they're just not getting a growth. Now, this article is suggesting that it's competition. So Disney and Amazon and Apple. I haven't tried any of those other products. So 8.3 million customers worldwide, new customers. That sounds pretty good, but then it dropped down to 2.5 million in the last 3 months. The thing that bugs me with Netflix is what they're having to do to get these customers. They're spending billions on production, which just seems, boy, that's a really hefty thing to do. Just to kind of, are y'all flocking to Netflix? What's the big Netflix thing now?
If you can get it through your telephone provider, like your cell phone provider, I mean.
What are you watching? I mean, it's got to be something valuable to watch. Is there anything out there?
Kanye documentary.
Yeah, documentaries. I've tried their documentaries.
I just have like one
They're
or two.
Netflix, yeah, to me, it's extremely capital intensive firm. It's almost like they can't stop doing that. They're kind of hooked on doing that, and it's really, really expensive. And to do what? At some point, they're gonna have so many customers, they're gonna have to spend it just to keep the customers, and that's like the worst case scenario, right? So I don't know if I can get too excited about Netflix, but anybody want to make a bull case for Netflix?
They raised their prices.
They raise their prices, right? And are they the highest, or are they getting to be the highest.
There's a lot of people that are on family plans that have like 5 lines on for like $120. And they're talking about doing away with that. So all 5 people will have to get 5 lines. So that could potentially quadruple users.
And there are some competitors out there that are the advertising competitors, the free competitors, and cheapies like me, that's like good enough. I don't know. I have tough time getting too excited about Netflix. Now I used to be a big Netflix fan, mainly because I love firms that when they're successful, they still make radical changes. I like that. That's what Netflix was. They were a firm that said, hey, it's working well, but we can do better. And you're like, well, wait, why don't you let this play out and make as much money as you can? Like, no, we can't. We've got to go ahead and change. So our competitors are now 3 behind us instead of just 2. I like that kind of approach. It's very, very aggressive. But what can they do now that's going to be that radical? What do they have left?
I think that's something that's actually pretty cool is the fact they have a lot of interactive type media. So that one, like, they typically only have it for like a bunch of children's show that I see with like my nieces and my nephews. But I think the kind of idea of that is something that's pretty cool and innovative.
I read one article about even thinking about gaming. I think that'd be kind of a radical shift in clientele, but maybe.
So before they would have a lot of TV shows that they didn't own. So stuff like Friends and The Office. So what they started doing is creating Netflix originals so that the profit directly goes to them and they can keep their money. They don't have to keep paying those companies to, air their shows. But the downside of that is that a lot of people got Netflix in the beginning to watch those shows. And now that it's producing Netflix originals, a lot of people are switching to different streaming services. And then there's also a lot more free streaming services that have what you pay on Netflix for free.
Yeah, I was thinking because of my Facebook.
I think Anthony had a question.
My Facebook feed, it's like doing these old TV shows from the 70s, like Carol Burnett, which y'all have never heard of. And I was thinking, Ben, in the 70s, it was 3 stations and it was an event and the whole family sat down and it's Carol Burnett, which now seems really corny to me and watch it. It's kind of fun just to watch that. We used to sit and watch that as a family, but now we have so many options. It's like it's like we can't possibly, our attention deficit. So the world's changed so much. I was starting to think we get to the point where we're just gone so far. It's like, I'm watching, 3-minute videos. It's like constant, and it's like, this is crazy. I'm watching this show, and they're not even related. It's like, are we getting to the point where it's just kind of insanity?
I read an article last semester that actually Netflix is thinking of doing like some of their original movies, put them in theaters to access those customers that aren't subscribed to Netflix, given that like their name and their originals are like now synonymous with like being a Hollywood studio, but not a Hollywood studio. So that gives them more access to like more customers, but wouldn't increase their subscribers, but it would increase their revenue. So that's another avenue.
Yeah, if they can take what they have and monetize it another way, that certainly would be interesting. None of that to me sounds like 30% growth. It's getting you to 5 or 6% extra growth. But
Just with like the recent price increases, just like a week ago, they announced like in 3 countries they're trying this new program where if you're sharing your password and your IP is from a different house, they're increasing your individual price.
Yeah, at some point they go so far they're gonna really irritate people.
How do they do that if you're moving around?
That's the thing. They want you just to watch in one house. So if you're coming from somewhere else, they're going to charge you extra.
They're charging you for going and watching at your hotel.
Pretty much.
Yeah, I mean, Peloton was talking about some things that they could do. I mean, Peloton is kind of similar to what you're talking about, is that they start producing their own music because that's been their big issue. It's costing them 30% of their revenues to pay licensing the music. So they're going to create their own music stars, just like they have these these workout stars. But that costs a lot of money too. It's not like this stuff is free. But yeah, what I thought about with Peloton is listening to podcasts. They have a new CEO, so that gets me interested. So I went and watched the YouTube video of the new CEO, and he wasn't nearly as exciting as they talked about in the podcast. So I thought he doesn't sound like the kind of turn the company around. He sounded like a really good CFO, but now he's CEO. So I wasn't quite so excited. But I do like the catalyst. I was talking, was it William or someone? A CEO can radically change a company, and that can get really exciting. I mean, they can come in and really do some things, and this looked like a pretty impressive CEO, but I don't know. I can't get excited about Netflix. Moderna and Facebook are the two I found the most interesting. I don't know if y'all disagree with these that I'm showing. I'll have to go try a couple of ones I haven't actually used. But, oh, that's not mine. So I like to do that, sometimes just say, give me the 10 stocks that are falling the most. Is there an opportunity there? I'm not gonna go out and buy them. It would be interesting to go see if you went out. Now I looked at Microsoft. Microsoft fell 50%. And it took about 6 months. And after that, it did nothing but go just straight up. Obviously, I could think of 50 other companies that fell 50% and then just kept falling. But are there companies like Microsoft out there that have something they're going to turn? I always think these firms aren't sitting around and saying, well, we messed up. Let's just be mediocre the rest of our lives. They're desperately, and they've got really good employees, right? These aren't stupid people. These are really smart people, very gifted people. They're doing whatever they can to save this company. And a bunch of really smart people with a lot of money, a lot of tools to work with, and they turn a company like
Google, stop.
I think there's a pretty good chance, maybe it's less than 50, but it's more than 30, I think. And if that's the case, the downside is they kind of meander along with a weak return. The up case is they become the next Microsoft. That gets me pretty excited. I think on Moderna and Facebook, I can make that argument. I don't know if I can make the argument with the other three, but because all three of those are already so expensive. But anyway, those are my 6 that I was looking at. So anyway, that's it for me.
Interesting news and some opportunities there. I don't pay for the Netflix subscription plan on my side, so I'm saved. Bringing up this next kind of social event we got going on, but we're not hosting it. It's BSC who is hosting it. It's an updated flyer compared to the last meeting. But to sum it up once again, the Investment Society was invited to be in a softball tournament versus the Business Student Council, a marketing organization, and someone else who I forgot.
Delta Sigma Pi.
Thank you, Alina. So we need at least 10 people to sign up. In the original link I had shared in the last meeting, we had like 6. I know there's quite a few of y'all who can play for us. We want to win this challenge, this tournament here. So hopefully y'all are willing to sign up for this. It is on April 9th, 10 a.m. to 3 p.m. All the details are there. I'll share it on Discord and Telegram. And now to sign up for this event, the BSC changed it up a bit. Now you have to come to me to let me know that you want to play and whatnot. But I'll definitely create my own form and I'll send it on Discord and Telegram. So more on that, but definitely participate. I'm gonna hopefully play. You don't have to be a pro or anything. So there's that. And promoting our classes. It is not too late to join a class. I had a member of ours come up and ask about the fact exam, and Carlos is teaching a fact exam course. There's a lot of sector classes as well that are going on, and Python courses in my class on Friday. It will be going on this week. Feel free to join. That one's on Zoom. And take a photo, or also on our social medias, this is posted. Now for the gift card winners. The 2, let's get a little drum roll. Yes, thank you. First one is Carlos Diaz. Congratulations.
Pokemon card. That's all I'm saying.
Nice.
Investments.
Okay. And our second winner, a little drum roll. JC.
Hey!
Congrats. JC. With me after just to get your email. And that sums it up for most of the meeting. I do want to promote the application we got going on now for the Sergio Silva Outperform Award. It's a scholarship for a member here that y'all have an opportunity to apply for. Yes.
And it's open to December grads.
of 2021 as well as May grads of 2020.
Okay.
You have to,
nice.
you have to have graduated December 21st or later. So you can be graduated in 2023 or 24, but you can't have graduated in May of 21. That makes sense.
Got it. Make sure to type that out as well and put it there.
And
But thank you. Join our platforms here. We got the Discord, Instagram, and now on Instagram we have daily posts, not posts, stories, daily stories of what classes are going to be going on in the FSC and whatnot, right? All of that. So if you have a free day, hop on our Instagram, look at the story and see what class you could join or sector. That concludes it. Thank you for your time today. Hope everybody has a good night.